Are you looking for long-term investment that can withstand the economic turmoil? The last 5 years have been subject to many headwinds: COVID-19, Ukraine-Russia conflict, rising interest rates, inflation. Finding a sector, an investment that resists and performs during these different and multiple periods of shocks is difficult. Luxury might be a good candidate. We like this sector for its herein characteristics, its resilience and adaptability. On the European market, luxury is gradually establishing itself as a major sector. It now represents 19% of the French CAC 40 index, and LVMH has become the largest European company with a market capitalization close to 400 billion euros. Luxury got off to a flying start in January, riding on the current optimism on China. The Chinese economy showed a strong rebound, which bodes well for luxury stocks. But the luxury sector is vast and its definitions are multiple, which has a layer of complexity. This is why one must remain selective and focus on the major luxury players that sail on headwinds. We no longer need to demonstrate the quality of their balance sheets, their ability to report higher results and double-digit margins year after year, and their success in offsetting one region with another. Let's have a look at an equally weighted portfolio composed of 4 large and well-known listed luxury companies: LVMH, Hermès, Richemont and Estée Lauder. The dollar-based basket composed of these 4 equally weighted stocks has outperformed the MSCI World, as well as the 11 GIC sectors over the last 5 years. But what about the future? Most luxury stock prices are at all-time high. Today, the valuation multiples are high but appear reasonable, as the estimated return on equity and earnings per share are higher for the luxury basket presented than for any sectors. Its fundamentals remain sound and intact, as China brings some good hope. One should keep in mind that inflation is still there, and that luxury companies have strong pricing power, as demand for luxury goods is fairly inelastic to price. They can protect their margins. But what would happen to the luxury sector in times of recession? The sector's consumer base is wider spread and less sensitive to economic slowdown, and the sector benefits from a defensive and growth profile. In other words, the sector is able to grow profits whatever the economy throws at it. It's quite impossible to predict the coming year, but one thing is certain: investing in luxury and hiding on this investment on eventual corrections seems to be an interesting strategy. Quoting Carolina Herrera, "Luxury will be always around, no matter what happens in the world."